So my name is Akhil Bansal. I'm head of Credit Strategic Solutions, and I focus on investing Carlyle's insurance capital. Lately, I've been asked, what are some of the things you're focused on that are happening in the private credit market? And, what I've seen is that a lot of people are focused on the asset side of the private credit balance sheet. What are going to happen to default rates, recovery rates in this market environment? Though I'm worried about that, what I'm actually more focused on is actually the right side of the private credit balance sheet. Because if you look at it, if you're an equity investor in private credit, what you're owning is a levered portfolio of private credit assets, levering those portfolios to deliver a equity-like return on the private credit portfolio so that it's high enough and interesting to attract illiquid capital. And so when I think about it, I think, well, if I'm an equity investor in there, not only am I taking the risk of defaults and recoveries on the asset side, but also taking the risk of the cost and the structure of those liabilities. And part of why this has kind of spurred thinking lately is because of just what happened with Silicon Valley Bank. Its asset side was very safe. It had more than half of its assets in U.S. Treasuries. It was that its liabilities, deposits, were flimsy. They could go away when markets and depositors got worried about the bank. And that's what happened. If you look back in history, like Silicon Valley Bank, you've seen a lot of catastrophes happen when there's been a combination of high leverage and asset liability mismatch. That's where, when you have periods of dislocation uncertainty, it's that combination that becomes toxic and catastrophic for the equity. And as we look at it, we're seeing more periods of dislocation. That is why, if you're a private credit investor, focus on the asset side, but also focus on that right side of the balance sheet and how really durable it is. Because as we see more periods of dislocation, more uncertainty in this market environment, you're going to want to make sure that you understand both sides of the private credit return equation.